$5 you put on, you add another $45 million to the net present value. I mean, it's a big step jump that comes through. But the project's pretty robust at $80 as well. So, I mean, we use 90. That was the consensus out there for the analysts, but it's also the consensus for the price setters as well, Trade Tech and UXC. So, it is very much within where we expect the market to be.
Hello, everyone, and welcome to another edition of CEO and Market Expert Interviews. I'm your host, Lucian. Most of you know me as Triangle Investor from social medias. I'm joined today by Daniel Major, Goviex Uranium CEO. Daniel, good to see you. Welcome back.
Hey, Lucian, great to be back.
Thank you very much. I always enjoy our sessions, and today is not an exemption. We will talk about Mutanga, about the uranium market, and much more. Let's first touch on the results of the feasibility study at Mutanga. They are out. Congrats on that, Daniel. I know that hard work and a lot of sleepless nights are behind them. So congrats, really. Why don't we start with you sharing some key highlights from the study and helping investors understand what does this mean for the company going forward?
Yeah, I mean, I think the first thing we have to point out is, there are not many companies out there who can have one project expropriated in the July and in the January put out a bankable feasibility study for their next project. So yes, a lot of work and a lot of hard work by my team to achieve that. And this is a bankable feasibility study. And the other thing that we did was go from a PEA, a preliminary assessment, straight to a bankable. And I think the reason we could do that was actually the project is pretty straightforward as a project. It is a very simple open pit, heap leachable uranium project. The heap leaching we've shown by the metallurgical test work is very straightforward. The minerals are highly liberated. You get high recoveries at 90% and you get it all within 21 days. So, the open pit is shallow. The rock is soft. You've got a low power demand. You've got low acid consumption in a country that produces sulfuric acid. We're next to a hydroelectric dam. You're next to the tarmac roads that have your imports and exports. And I mean, everything you kind of put down as, okay, what do I need to tick off to make a project successful? We can tick these all off for Mutanga. And I think that's what the results show. We've got a very solid project there, 12 years. We're looking at a net present value at 243. We're looking at a nice bankable IRR at 21%. I mean, that's using $90 uranium for those that will ask that question. But you got a 3.8-year payback on that full equity, if that was an equity model. So obviously, if you look at it from a debt point of view, where you'd be looking at roughly 2/3 of that being debt, this is a potentially very debt financeable project as well. So all of the bits that you're looking for the next round of projects to come through, Mutanga's got to be there. It's mine permitted already from that point of view. We are currently got to work on the ESIA approvals, but this is Zambia. We've done a lot of work already. There's a very robust process of approval for ESIAs in Zambia, which we will go through. And we should have that resolved well within this year that we're at the moment. So this is a project that has a real potential to get into production. It's, as I say, not complex. We can get it through. We just got to sort out the financing for it, sort out that last permitting, and go forward. And it's got upside to it as well. We really focused it on the simple project. We focused it on Mutanga and Dibwe East. Focused on getting a project going, generate the cash flow in the company, and then we can work on the upside to it. The satellite deposits, the exploration targets that we've got around within the license and other places in Zambia as well. So yeah, a great place to kind of rebuild, drive our company forward, and Zambia, great jurisdiction to be mining in as well.
Definitely. Like you said, you use $90 uranium in the study. How are the numbers looking at, let's say, higher prices, $5 or $10 higher uranium prices?
Well, for every $5 you put on, you add another $45 million to the net present value. I mean, it's a big step jump that comes through. But the project's pretty robust at $80 as well. So I mean, we use 90. That was the consensus out there for the analysts, but it's also the consensus for the price setters as well, Trade Tech and UXC. So, it is very much within where we expect the market to be. And I'm sure we'll come to that discussion a bit more in the marketing section of your interview.
Sure. If I understood correctly, the project's cash costs are pretty much the same like 2017, despite the rising costs and the inflation. How did you manage to do that?
Um, Obviously, when you do the PEA, you're using your best estimate. I mean, it really is almost a guesstimate of what you think costs are, both operating and capital. And we had the benchmark of Madawaela at the time because we had already been through that study. So we were able to use some of those factorings from that information. But on the other side of it, Madawaela is quite a heavy mine from a grind point of view and acid point of view. We knew it was lower. But a lot of this as well was us going back and re-looking at it ourselves and saying, all right, what can we do to improve the process design? We went from normal crushing to mineral sizes, a lot less power demand, a lot cheaper from a infrastructure point of view as well. We went to an on-off heap leach as well. We got better recoveries, which kind of helps as well. Marginally better recoveries. Atkins consumptions were relatively the same across the two projects. So, we just went through each stage, and that's a core part of my process on these projects is to keep looking, keep asking the question as we go through. You get a result and you go, well, is that the right result? What can we do different on that? Or have we reached the end of what we can do? In the original study, for example, it was an on-only pad. We went to the on-off pad because it just makes logical sense. Tried to constrain the capital, but it helps support our costs as well going forward. So just the engineer in us has to keep trying to do better. I mean, I think the estimate for inflation out there from 2017 to where we are now is like over 40%.
Yeah.
Um, if you take our all-in cost, we actually came in under our all-in cost for everything as well. Even though the capital was up over the project, it's bigger, it's got more pounds. And I think capital is one of those things. We didn't have a mining fleet in the original one in 2017. It was contractor operated. So, that's one of the reasons why the capex went up. But I think also it highlights the industry issue of capital. And it's not just us. There are gold projects, there's base metal projects out there in the world. We're seeing capital numbers. I mean, one of our North American peers saw their capex go up by what, 30%, 50% not so long ago, to a very large number. So it's a problem in the industry, and highlights why, we all talk about metal prices having to go higher, but this one works really well at 80, looks even better at 90.
Right. You have a 2028 production goal. Daniel, can you walk me through the process from now to 2028? When you will have, what will you have to do in the meantime? What milestones you need to achieve to get this going in 2028?
Yeah, obviously quite a lot.
I
But
mean
no,
the bigger ones.
yeah, the bigger ones. No, obviously, let's start with the permitting side, as we already went there. So the thing we're missing is obviously that ESIA approval, which allows us, and that includes a relocation. We do have to move two communities, but we've done a lot of work with those communities. So the ESIA itself will be filed between now and the end of the quarter. That's already pretty well drafted. We're just doing into review at the moment. We That normally takes about 6 months to go through the whole process. In parallel to that, we then have to do the relocation process as well. It's a review and agreement with the community, not moving the community, but just that review. We started that last year. We're at fairly in-depth discussions with the communities around Mutanga and Dibwe East. We're going through the IFC approach on it to make sure exactly what it is that we're going to provide the people who are being moved. And they're very keen. I mean, they are very positive towards the company and the work that we have done in the past on CSR projects, etc. They're very keen to see where this development comes. This is very low income. This is subsistence farming, and so we 2 years ago, I think we discussed before, we started adult education with them as well, so that we could then move to the next step, which is to train them to become. So we're providing that socioeconomic development for them as well. We're not just kind of parking them and moving them. This is about giving them the opportunity as much as we can. So that takes us through to, it normally takes about 6 months. So that's like Q3 going into Q4, where we would expect to get the approvals for the ESIA. In parallel, I was in Indaba not so long ago. All my meetings predominantly down there were with potential lenders, just to introduce the project. So we'll be appointing debt advisors very soon. They then send out their teasers, get in the LOIs, the letters of intent, and then once you know who your primary core lending group is going to be, go through that in-depth due diligence. Now, that process takes at least 12 to 18 months. I mean, depending on how complex it becomes, including the technical review, the environmental review, all of that. So that would put us into kind of middle of next year. And it's pretty well a 2-year build, based on the work coming out. And it's quite simple. I mean, once you get up onto the road, you really do just have to clean the ground. We've designed it, take it to an area that's relatively straight, flat. The infrastructure needs to go in for the heap leach, and for the process plant. The one thing I do like about this project is not reliant on the time frame for the mining side. The mining starts at Mutanga, and you can actually feed ore from Mutanga onto the heap leach within 4 months of starting mining. So it's very quick to cash flow. So you're not kind of having to balance the two. You can kind of focus on the plant and then say, right, I know where I am now. Let's bring the mining equipment in, and start the mine. So that's why you end up in 2028, with the financing and everything else, and 2 years to build.
Okay, that's a great overview. I'm curious about the financing part.
Yeah.
Uh, I mean, are there any interest so far in backing financing for Mutanga? And do you need to actually bring the final investment decision?
From a lending point of view, I mean, I literally have spent most of Indaba sitting down at various meetings with potential lenders.
Yeah.
And what I will say is that there's been positivity towards the sector, positivity towards Zambia, and an understanding that we have a straightforward project. As I say, the next step is to send out a formal request, through our advisors, where we present in simple terms the project. We send them the basic cash flow model and say, well, guys, is this interesting to you? If so, would you like to come on board? And you send us an LOI. I would expect we're going to get, based on the meetings I've just had, I would expect we're going to have a pretty positive support, particularly out of the Southern African market, across the board. So that's, really positive. And then, of course, you've got the DFIs and the Europeans as well, on top of that. So yeah, I came away from South Africa very confident, about our next steps based on what we presented to those lenders.
Fair enough. Daniel, are there any obligations to form joint venture with the state, 10% level, 20% level, like Niger had?
No, under the code that's there, we only have a 5% royalty. We own 100% of the project. There is no requirement, under any existing laws or any new laws that have just come through. There has been talk within Zambia about wanting to be more involved in projects, but that tends to, the way they're focusing that is very clearly on new projects at an exploration stage. They're doing a lot of work on geophysics. They're doing a massive geophysics program funded by the government of Finland, at the moment, and therefore they want to come into projects early, right at the very beginning. But they've made it very clear it's not for existing projects. If you're there, would they be interested in coming in as an investor? Yeah, I believe that, it would be on a commercial terms, basis, and we'll wait to see, if that eventuates with the government. But no, there's no obligation, unlike Niger, where you have to have a free carry. That does not apply here in Zambia.
You explained the timeline very good, but I would like to hear maybe a missing part in that is how is your offtake strategy looking?
Yeah, no, I mean, we did a lot of the work last year. We'd obviously done a lot of work before that on offtake with Madawaela. We had a really good meetings in fourth quarter last year in Kansas. We at the NEI conference where we went through the Madawaela project as it stood back then and just explained the principles on it and said, look, the FS is coming. Um, we have not started the offtake discussions, really, because we needed to get the FS out. You've got to be pragmatic. You've got to show the utilities that here's a project that can be built, and here's why we think that timeline is doable. They're not going to just say, here, have an offtake and not worry about
Of
it. So you
course.
need to be able to show that. We've got plenty of time still to pull off takes in. And I think one of the things that's going to be key as well is the guidance from the lending community of how they want to see offtake structured around this, because it does impact your level of debt that you can take on as well, both on the price, the tenor, and the amount of offtake, because obviously you're then balancing the risk of the cash flows that will come off the project. So that does impact the lender's view on it as well. The more conservative, the more money you're going to be able to secure, probably. We'll start that. I actually got a call this afternoon with a potential off-taker. Um, and we'll go through that. But, I don't think there's a rush at the moment. I still think the uranium price will go up this year. So there's no killer rush. We've got a 12 to 18 month window. And myself and Chris Lewis, the uranium sales guy, will be, out there banging the drum for Goviex and Mutanga.
Yeah, when you said that off-taker called you, and that was actually my next question. I believe there is an interest for offtakes even in this early stage, and that probably they are knocking on your door. And you answered the question, yes, they are knocking at your
Yeah, and I think what we've seen as well, in all the discussions that I've been having, and it's something, it gives me confidence here, and we talk about it in our presentations, is the bifurcation issue. Africa sits in that beautiful position between the US and the Eastern buyers as well, the Western Eastern buyers. And, if you look at where the uranium producers of America say they can get to, it's like 15 million pounds or whatever. Well, that's, someone like Constellation, it's their full consumption a year. Well, that means then the US becomes very reliant on Canada. Diversification across the board as well to meet all of the needs. And you look at the new statements out of the US, massive demand growth they were looking for on nuclear. And if you're going to grow nuclear in the US, then you need to grow your supply. And the US is all over Zambia. I mean, they just spent, what, $500 million on the Loboto corridor to help get that copper trail going through into the Atlantic Ocean and to that seaboard to get it into the West rather than it currently going out the other way or go predominantly into China because of the railway that goes that way. So you've seen this big investment from the West, and therefore it needs those commodities. And you've got the same situation coming the other way around, where China gets, what, 70% of its feed out of Kazakhstan. Oh, sorry, 70% of Kazakh production goes into China, but China is quadrupling its demand between now and 2040. And it's okay, well, and it because of safeguarding issues from the Canadian and Australian governments, it can't buy from there. So it has to find alternatives. And Africa sits there right in the middle, which is why China has big mines sitting down in Namibia, because it can get that feed, and that feed can go all the way there from Walvis Bay round to Shanghai.
Yeah, how is actually Zambia looking with the geopolitical interests? How is China presence and other presence, let's say Russian presence and Western USA and others?
As I said, the USA have made a lot of effort in the last few years to really push um, into Zambia. You obviously got people like Cobalt as well, with a big copper project find down there. The Ivanhoe Group is
Yeah.
pushing down there to do a lot of work on geophysics survey and the like. As I said, the US government last year there were military exercises there with the Zambian government. You've got this investment from the DFC onto Loboto. So you got that. China has a long history there now. I mean, if you go up to Ndola, Kitwe, and the Copper Belt, all the road signs are dual language,
Yeah,
English and Chinese,
I know.
all over that northern part of there. So because there are a lot of Chinese-owned copper mines up there. Um, but you obviously had issues in the last few years with Zambia with its debt issues that needed to be resolved, and those have pretty well been fixed. And Zambia seems to be on a very clean path between the two. And this is a country that is very commodity driven. I mean, they want to triple copper production. They want to diversify mineral production. So it's not just about copper. They see minerals as their ability to grow. They're trying to push their power growth forward as well. They've been dealing with their infrastructure. Why these railways are so important. Why opening up and spending money on their border posts, particularly on to the DRC to get concentrates in for smelting, etc. So, and that's why for us to be there, you're in a country that wants mining. It is so keen on seeing mining and development of its resources and using those resources to develop the whole country.
Daniel, one thing that caught my eye that Mutanga has a potential for significant resource expansion through the development of satellite deposits and exploration. If you can expand a bit on that, how much of the potential are we talking here?
Yeah, so anyone who's kind of looked at the project previously, we've got three satellite deposits. We've got Nyame, Gwabe, and Dibwe. We didn't put them in to the feasibility study, but mainly because we just kind of felt it would be better to present, particularly the lending community and the capability, a project that we knew we could build. Let's focus on a core project, the big project, get it up and running. And then once it's up and running, we can look at the satellites and bring them in out of cash flow at the right and appropriate times. So they're not big. None of those satellites are going to, are massive, but they're all commercially viable. They're more expensive from a production in. They
Mhm.
cost about $10 a ton more to deliver the ore in. But once you're in, they just go on the same heap. And we tested all their metal, and we've taken them all to bankable. So we've gone through all the engineering design, all the mining schedules for them, all infrastructure design, the water supply, power supply, everything's actually been taken to bankable. We just at the end decided focus the project on something that can be built, bring them in later. And so that actually be included in the ESIA document that's going out as well. So we did all the environmental for them as well. So they can come in. Um, they had about 500,000 tons per annum for those 12 years. So it's a decent tonnage that comes through. And that's just on the indicated resources. They actually have quite a lot, particularly Dibwe's got a very large inferred resource. We just never drilled it because it's quite small. There's the inferred resources, obviously, that are within the deposits. We have to mine through them anyway. And they've come at the moment, as you know, in any feasibility study, inferred resources that get mined just go to the waste dump.
Yeah.
In reality, no, they don't. You've paid the marginal tonnage. And that's one of the really good things about Mutanga is that the marginal processing cost is really low. So if you bring out ore tonnage that's got any grade in, you just stick it on the heap. And it's, you're going to have some capacity there, so you can do that. In other presentations, we've also pointed to the exploration. The most obvious one is right there next to Mutanga. Within 3 or 4 Ks of Mutanga is Mutanga East, that was discovered previously. But we've been so focused on infill drilling at Dibwe, we've not pushed out our exploration. So yes, you've got things like Mutanga East sitting there to go and drill and explore. And then further afield, we've got things like Churundu Extension. We've got Kariba Valley, which is just to the south of the Mutanga project itself. And then we obviously now got to think about our future as well as we move forward, and hence why we're starting to look at Lundazi. We've got other projects that we're applying for to the south of us as well. So we're saying, well, look, let's get this one up and running, and then we'll start building our future around Zambia uranium as we go forward as well.
Yeah, will you drill this new area you staked this year?
No, this year is low cost. I think we've got 300,000 to pay. to spend on it, and mainly just field work.
Okay.
We've never done any work up there before. We got the data from one of our predecessors. We bought all their data up in that side, so we can see, there's some logic, but we need to do some field work over that ground, see what makes sense, and then then we have an option. We just get option through each one, and then probably next year we'll do some drilling on it.
Yeah, but the geology is pretty much the same, the depth.
Basically the same geology, and that's what's so impressive. That geology goes all the way from northeastern Zambia, all the way down the edge, and all the way through into the end of Lake Kariba, and we're sitting on it. So it's hundreds of kilometers of strike of exactly the same geology to go and have a look at.
Okay, I believe we covered Mutanga. Do you have any updates regarding Niger? What is the current company standing and the status of the legal actions?
Yeah, so as we announced in our press release, we have filed for exit. That process is going on. We continue to, you know, try and seek a amicable result here, and see what comes through. But in the meantime, we will continue to pursue that process. Um, it takes time. I mean, once you filed, you then have to start pulling together the tribunal members. So nothing's going to happen for a little while we try and pull everything together with the tribunal, who the tribunal members are. So don't expect to see a lot for a long time on that one, as we go through the various stages that have got to be gone through. But in the meantime, we're open to a discussion, and see what comes out of that as well.
Daniel, are there any plans for share consolidation this year?
It's certainly, definitely that's on the discussion with the board. The time that we would do it would be for the AGM. Under our articles of association, we have to seek approval for the shareholders to do it. Our normal AGM is the end of June. So that would be our timing for application to the shareholders to do that.
Got it.
What it looks like, the board has still got to have a discussion and decide.
Okay, okay. Maybe last question, news flow. How are we looking with the news flow? When or what will come out next in the next,
Yeah,
let's
so I
say, few
mean,
months?
yeah, and the next one, obviously, we've got to file the full FS itself, so that's got to go through. We've got to appoint the advisors for the debt side. We've then got to put the application in for the ESIA. So those are going to be the very short-term ones that are coming through. Depending on how quickly we can get the lending community to respond to the teasers, and that would be sometime in the next 4 to 5 months, going through. And then obviously any updates we can provide on the ESIA. And obviously if the uranium price can pick up, then obviously we'd be looking at trying to pick up an offtake as well and start building our book on that. So just, we're now in that position of targeting the construction of a mine, and everything focuses towards that.
Okay, that was Daniel Major, Goviex Uranium CEO. Dan, great chat as always, and thank you for coming to my show.
It's an absolute pleasure, and thank you very much.